Good morning, happy Monday. I cannot believe it's already October 28th. I don't know where this year went by, but it is blown on by. Halloween's in a few days. Isn't that crazy? I guess when you're having fun and just kind of doing whatever you want all year, time just flies by, right? But hey, we're getting back into the investing videos. I started a new portfolio and I want to introduce to you what I'm doing. So in case you ever want to invest and you want to get into it, I'm going to teach you how to dividend invest and show you how your money can make you money even in your sleep, right? Making money in your sleep is probably the best thing ever. We're going to start off small. So what I'm planning to do is I'm investing $125 a week, which equates to, do the math, 125 times 4, it's $500 a month, right? It's not much. If you can do less, do less. If you can do more, do more, okay? But what I'm going to show you is the dividend portfolio that I've built. I've put 21 different stocks. I didn't put mutual funds. I did stocks. There's a big difference, right? And so I do have another portfolio that I've put some money in that as well that are mutual funds, and I'll share those as well. One of them doesn't really have a big dividend. One of them has a pretty nice dividend. So I think there's 3 funds in that one in my Fidelity account, but we'll take a look. Right now we're going to focus on M1 Finance. I just deposited $125 into it last night. Like I said, $125 a week. Maybe I'll increase it, maybe I'll decrease it, but that's the plan right now. I want you to follow my journey on how this works. That way you can educate yourself and you can put your money to work for you. I want everyone to be able to succeed. So it may not look like a lot of money now as it grows, but once it grows, it's going to be really, really good, and just reap the reward, right? So some of these dividend funds, these stocks, they're going to pay out monthly. Some of them will pay out quarterly. So I'll get into that of kind of what I'm using to be able to monitor it and track it as well, not just on the M1 Finance. So let's get into it. So here you can see my Welcome Fabian, my dividend tab here, my brokerage for dividends. I put 125. It says my net worth's 125.99. So what we're going to do here is click on dividends. And later on I'll show you how to create a pie is what we call it, okay? So here, it has a pie. It has my different companies, right? So we got Kraft Heinz, Intel, Altria Group, Main Street Capital, so forth and so on here, okay? And what happens is when I buy into this pie that I've created, I've allocated a certain percentage of the 125 to go to, okay? So 7% is into Intel, 7% is into Altria Group, 7% is into Main Street, another 7 for Verizon, and then it goes on from 7 to 6 to 5 to 4 to 3, however I have it, okay? So 21 stocks are in this company or in my portfolio, and we're just going to go down the list. Here, we got Kraft Heinz, we got Pfizer, Enbridge, Starbucks, Pepsi, Procter & Gamble. We got a Fidelity High Dividend Fund. I think it's the only one. Actually, we got a few more funds here. We got Rhythm Capital Corp, JEPQ, JEPI, JEPI, right? We got Johnson & Johnson, Waste Management, JP Morgan's Chase, Ford Company. You guys, you've all heard of these companies every day, right? If you use any of these products daily in your household, maybe you should invest in them. We got Realty Income Corporation, we got AbbVie, Coca-Cola, Verizon, Main Street Capital, Altria Group, and Intel. I have 21 funds. I think, in my personal opinion, and hey, this is for educational purposes only, take it with a grain of salt and figure it out on your own or find someone to help you to figure it out. I think having 20 to 30 or 20 to 25 different stocks to build a dividend fund is probably best in my opinion. And like I said, I'm not an expert. However, I'm going to just have you follow my journey and you can figure out what's best for you and what you want to put in your fund. Or you can copy mine. But it's at your own risk, right? Scared money doesn't make money. I've always said that. So, be confident in what you're doing. Having money in the bank, 10, 20, 30, 40, 50 grand, that does nothing. I think you should have a year's worth in the bank in case you lose your job or if something happens, emergency happens, a funeral, something crazy happens. But I think once you have a nest egg, you really need to invest your money That way it can grow and your money can make money. I don't want to be 60-year-old and not have nothing. I don't want to be 50 and not have nothing. I'm not even 40 yet. I'm almost there. So if you start young, you're going to be so far ahead. And I'm teaching my kids to do this. My son's 16. He already wants to invest. I told him right when he's 18, he's going to invest. If he decides to start working now, I'm taking 20% of his income and I'm putting it away. And I'm going to invest it for him. And then we'll trade it later when he's 18. So start young. This is stuff they don't teach you in school. I wish they did, but they don't do this in school. Everybody should know how to do it. So the stock market's there for a reason. It's not to lose your money. It's not going to happen. The stock market's never going to just go down and be crappy, right? And everyone loses. There have been problems like the real estate crash in 08, 09, COVID in 2020 that have really hit the market. But that's when you save your money and you invest in those times when those happen, because the market will drop 20, 30%, and then you'll be fine. All right, let's get into this. So the first company we want to look at that I'm invested in this portfolio is Heinz. This has a market cap of 42 billion. Pretty good. The dividend yield on this is 4.61%. It's a pretty nice dividend, okay? I don't remember if this one pays out monthly or quarterly, but for me, I want funds that are going to pay out monthly. If it's quarterly, I'm okay with that too. I won't be okay with that if I retire quarterly, because that means I'm getting 4 payments. Let's say January, May, August, right? And then whenever else. So I want to be able to have my income every single month if I'm pulling from this, okay? So let's say down the road I have $1 million. I have an 8% yield. That's $80,000, okay? After taxes, it's whatever it is. But if I can get this money monthly as some income later on when I'm retired, besides having a 401k and whatever else I have, it would be pretty nice. So if it's only quarterly, then I get this lump sum of money. I have to be able to manage it for those few months until I get my next lump sum of money. It could be done, but monthly would be kind of nice. All right, back into the Heinz Company. 4.61 dividend yield. Let's look at the details. Here, I think this only allows me for M1 Finance to look at the last 5 years. I'd love to be able to look at the existence of the company, but I can't. So back in 2019, it was $28 a share. Kind of went up a little, went down, and then here in 2020, COVID happened. The market dropped almost 30%. That's a huge hit. I'm sure people were going crazy. They lost so much money, but remember, the market has always shot up like this. It's always went up. Over the last 100 years, look at it. The graphs don't lie. The numbers don't lie. The market has always recovered. So here's where you buy again. Just keep buying. And one thing I've always said, it's not timing the market, it's time in the market. Listen to that again. It's not timing the market, it's time in the market. So just consistently buying. Don't be scared. So if you would have kept buying, you would have got it at a better price. And then look, it went up and up and up and up. Oh, here we go. Went back down, went back up again. So from 2019, it was at $28 to now, it's at $35. So it is up. But remember, I want the dividend yield, 4.61%. So this whole time, if I would have been in it for the last 5 years, I would have been getting paid out month after month or quarterly after quarterly. And what I'm doing with my dividends, I don't touch them. I reinvest them into the stock. I reinvest them into the security so that it goes back. Okay, so now let's go back and let's look at the next company. Here we go. Next one, Pfizer. Okay, 5.91% dividend yield. Okay, let's look at the details. Last 5 years, $28, right? COVID happened, went down. Didn't really go down, actually. But yeah, it did. Here, it went up, went down. And now Pfizer's basically back where it started. So what's going on with the company, right? But remember, if I would have bought back in 2019 at 28 bucks and some change a share. And it went up and down, up and down. It's still at 28 bucks a share. I wanted the dividend yield anyway, so I'm still getting paid out, right? And I'm still getting more shares. That's the whole point. I do want growth, but there's other strategies to have growing companies, okay? Next one. Enbridge. What do they do? Look, oil, okay? Energy, okay? Dividend yield 6.52% on these bad boy. Let's look at the details. Like the last 5 years, 40 bucks, shot up, went down to hell because of COVID. All right, here we go. Boom. It's back up to 40 bucks. Dividend yield 6.52%. It's pretty nice. Next stock I have in my dividend portfolio. Here we go. Starbucks, right? Everybody knows Starbucks. You want some coffee? Everybody likes coffee. Dividend yield 2.51%. It's pretty small. Starbucks is more of a growth stock, in my opinion, but I still, drink coffee here and there. Actually, I started drinking coffee every day. But you know what I'm doing? Instead of going out and buying a coffee every day for $6, I use my Keurig at home. It costs me like 50 cents or 30 cents to drink a 12-ounce cup of coffee. It's not bad, right? That extra money I can invest. COVID happened, so 99 bucks back then, right? 2019. A little down, but remember the dividend yield, right? So you haven't really lost. You would have took your money out here, you would have won. Right here, you would have been up shit river, right? And then back here. So the dividend yield is what we want. Remember, this is a dividend portfolio, okay? Next company, Pepsi. Everyone knows Pepsi? Dividend yield 3.16%. Let's look at the details, okay? 136 bucks back in the day. Dividend yield 3.16%. Oh, I forgot to tell you guys. It also shows the day range on here. It also shows the 52-week range, right? The lowest or the last 52 weeks and the highest, right? Not bad. About a $30 swing, okay? So back here, 136. Now it's up to 172. So you would have grown almost 40 bucks per share, in your portfolio, and you would have been getting the dividend yield. So Pepsi's a nice stock. Next one, here we go. I'm kind of going through this quickly because I don't want a 1-hour video, right? 2.39%, Procter & Gamble. Everybody knows that one, what they do. I mean, they do so much stuff in their company. So look them up. I'm not going to go into too many details about it. Actually, I'm not going to go into any. You know what Procter & Gamble is. So back here, 168 bucks, dividend yield 2.39%. It is up to 168, 169. 123, 169. It's grown. So over the last 5 years, your stock would have grown and you would have got the dividend yield. It would have been pretty healthy to be in this one too. Okay. So next stock. Here we go. We got my Fidelity High Dividend Yield Fund. Even though it's not, it says it, but it's 2.77%. I don't really consider that a high dividend yield. So high dividend for me is anything above 6%. That's high. So let's look at the details. This is a growth stock. Okay. Here, 30 bucks back then. Went to hell in COVID, down to $20.61. And then it just shot up. Look at this. Oh my gosh. Not bad, right? It's almost doubled. So let's say you would have had 10 grand in here. You would have been almost at 20 grand a day. Plus you would have been getting the dividend yield every single month or quarterly or whatever this pays. Or once a year. Not sure which one this pays. Okay. Next on the list, we have Rhythm Capital Corp. 9.54 dividend yield. It's pretty high. But let's look at the details. Let's see if they've grown or if they've lost money. Okay. 10 bucks. Down to 7. Down to 11. 10.50. So imagine you started back then at 10. You're still around 10. You haven't lost any money, but you've been getting the dividend yield. Okay. You've been getting the dividend yield, which is nice. All right, next one. Waste Management. Everyone has garbage cans outside their house, right? Is it a good company to invest in? It's not going anywhere, right? That dump truck comes here every Tuesday between 10 and 12. They're here every week. Why not invest in them? 1.45 dividend yield. Do I want to keep this one in my portfolio? I don't know, right? I'm debating. I'm always going to take something out, put something better in, but Waste Management has probably had good growth. Okay? Check this out. Even though it's a dividend fund, $112 in 2019, went to 90 something bucks during COVID, and now it's up to $207. So, it's almost doubled your money again. Okay? If you had 10 grand in here, you would have 20K today, and your dividend, you would have a little crappy dividend yield, but the growth is really nice. So I might take this one out. I might just keep it. I'm not sure yet. I haven't really decided. Like I said, I'm always messing around with the portfolio now that I've created it. JP Morgan Chase, everybody knows them. Chase Bank, credit card, right? Good account. Let's see, 2.25% yield. They're not going anywhere. These guys are a behemoth. Okay, look at the last 5 years. 126. You're pretty much double your money on this one too. And you got a small dividend yield that you get every month or every quarter. What else do we got here? We have Ford Motor Company, right? This one's been around. This company's been around for 100 plus years. Okay, 5.42 dividend yield. I really like the yield on this one. Let's look at the details. Last 5 years, $8, $11. Okay, so you're up. You've grown. You've also got the dividend yield. Not a bad company. They're not going anywhere. So let's see. What else do I have in my portfolio? We're almost finished. Realty Income Corporation. 5.16 dividend yield. Let's look at the details on this one. 80 bucks down to 60 something dollars. All right, so think about it. It's lost a lot, right? It's lost 25% of its growth. However, since COVID, okay, it went to 40 something bucks, right? $42. It's still up. It's up quite a bit. So, but it's not up from 5 years ago. I think it'll get there eventually once real estate and everything else starts doing better. High interest rates suck right now. So, but 5.16 dividend yield, it's pretty nice. You can't be scared for the market to drop. It's always going to recover. I've always said that. We got ABBV, 3.3% dividend yield. Let's look at the details on this one here. Okay, last 5 years. I wonder if I expand this. Does this show? It still only shows the last 5 years. That kind of sucks. So let's look at the expanded one. Okay, $78. COVID happened, went down to 64. Boom, boom. Look at this. Look at this. $78. You've already doubled your money right here. Okay, pretty much. And it just keeps growing and growing and growing. Holy smokes, right? This is a good fund. Pretty soon you're going to 3x your money in this fund. It's pretty nice. And a 3.3% dividend yield. Okay, we're almost finished here. We got Coca-Cola. I told myself I wasn't going to drink soda no more because I started weightlifting again. Have I had a soda? I think I had one the other day. But I've been pretty good about it, just drinking water. Dividend yield, 2.9%. Let's look at the details on this one. Coca-Cola has been a great one to invest in. Let's look at the last 5 years. $53.94. It dropped down to 45. It's back up to almost $68. But if you look at Coca-Cola, let's look at it. Let's look at Coca-Cola max-wise, okay? When it came out, Coca-Cola came out at $1.30 a share back in 1984. I didn't even exist. So if your parent would have invested in this company, let's just say $1,000, okay, back then. So let's do the math, okay? If your parent invested $1,000 at $1.35 a pound, so 1,000 divided by, so they would have had 740 shares, and if they didn't touch it, 84, 94, 2004, 2014, 2024. If they would have not have touched it for 40 years, your grandparent or your parent or whoever, 40 years of growth, 740 shares. What's today's price? $66.48. They would have 50 grand. That $1,000 would have 50 times itself. Imagine that. So if they would have did $10,000 back then, divided by $1.35. 7,407 shares, 7,407. You times that by 66.76. That's a lot of money. That is a lot of money. $500,000 for a measly little investment back then, right? So just imagine that, right? Of what the power of investing can do for you and for future generations. It's a big deal. This is stuff they don't teach you in school. I've said it over and over and over. All right, getting a little off topic, but anyways, dividend yield 2.9%. Coca-Cola is a great company. Next, we got Verizon. I use Verizon. 6.55% yield. Let's look at the details. Last 5 years, it's went to hell. $60. COVID happened. It's kept dropping and dropping and dropping and dropping. But now I'm getting it at a deal because I think Verizon will go back up. Okay. But I like the dividend yield. I see the potential for this. I don't think they're going anywhere unless they sell out. So I'm still going to keep it because I want it in my portfolio. I didn't buy it back here when it was dead or when it was high. I didn't buy it when it was dying in COVID. I haven't bought it. I just bought it yesterday. So I'm right here. This is my market. For me, hopefully it goes up back to 60. Next one, Main Street Capital. 5.69% dividend. Let's look at the details. Last 5 years, $43. COVID happened, went down. It lost half of its value. It lost more than 50% of its value when COVID happened. Then it went back up. See, now it's winning again. But if you would have bought here, you would have doubled your money, tripled your money, almost. A nice 5.69% dividend yield. Okay, Altria Group, MO ticker symbol. 8.21% dividend yield. Okay, let's look at the details. $50. COVID happened, went down to 34. It's been kind of going up and down. Now it's at $50. Almost. So technically, you're not really at a loss, but you would have been getting a nice 8.21% dividend yield. Can't complain. Can't complain about that at all. Last but not least, because I might be switching stuff out, Intel, right? Intel, I like Intel. It's been around forever. 2.21% dividend. With AI coming aboard and everything else, I think this one here could be a really nice fun later on. I think it could grow quite a bit. And for some reason, when I click details, it doesn't want to do nothing. So we're not going to look at the details. Okay. This is my portfolio here in this dividend account. 21 slices in my pie. I've just went over them. Black and white. I'm not hiding nothing from no one, right? Don't need to. I just want to educate people on what you could do. Okay. I'm putting 125 a week. Don't mind this dividend things earned. I haven't earned that yet. And I haven't gained this in the market either. $30. Because I started one before and then I ended up quitting it because I didn't want to commit to making videos on it, but I decided I was going to this time, so we'll see what happens. Here's one thing I want to show you. I have a dividend tracker, okay? I have a Fidelity account that I had started a couple weeks ago, and I put like $5,000 in it. So I have FCROX. Okay, let's look at this here. This shows the max of everything. It came out back in 2019. It literally did. At $10, you would have doubled your money already. And it has a small dividend, right? So shows the dividend growth, the streak of it. It's been paying out a dividend. How many shares I own? Okay. Next one, we have NEO. This has no dividend. Okay. This is like the Tesla of China. I've decided to put into this one here, Max. I remember when it was like $8. I was going to buy it around here. I didn't. Shot up to almost $50, $60, and then it went down to hell. But now I'm buying into it. I'm going to dollar cost average. I'm going to keep buying it every week or every month. Okay. Next one, SCHG. This is a really nice one. I put $3,000 into this one. Obviously, they took some money out because Fidelity has to get their piece of the pie. Okay. Shows the dividend yield 3.57%. SCHG is a really nice one. Let's look at this max wise. Okay. $56. Now it's up here. I don't know what this means. 80 bucks is where it's at now. Oh, I know what it means. It was at 80 bucks, and then there was a stock split. So the stock split gave you 3-to-1 ratio. So then instead of it being 80, they cut it down in 3. So you got 3 shares versus 1, because it's more appealing for people to buy it at $28.25 than $80 a share. So for every share you had, they split it into 3, which is kind of nice. So I own 106 shares of this stock. Eventually, I plan to own 1,000 of them. This one has had a nice 13.3% or 13.38% return in the last 5 years. It's a really nice fund. I think there's this mutual fund has 100 stocks in it. So next we got M1 Finance. I just transferred all this to the portfolio. Shows my holdings. Okay, shows my dividend yield average, October income. I don't know if this is really accurate yet because I just did it. Okay, and it shows all my funds here. The shares that I have, the price, the change if they're up or down, which you can see most of mine are winning. The dividend yield between all of them. Okay. Then it shows this actually is the annual income because there's so little money in here. Off that $125 I invested, I'm making $6.17 a year. Not bad, right? It's free money. Let's go to the payout calendar. Here, I'm not sure if this is updated yet, but it shows my year-to-date income, my monthly average income. I'm getting $7.26 a month for free. But here we go. My December income shows what's paying out, $27.34. My April income, another $27.15. My July income, $27.35. Because there's funds in here that pay quarterly. Okay, but once this really updates, I think it'll be kind of cool. Yep. So if I go back here to the payout calendar, this is called the Dividend Tracker. I really like it. I pay $100 a year for it. It's really nice to control everything and see everything. See, it tells me what's getting paid out. JEPI's a monthly one. JEPQ's a monthly one. All these other ones here are quarterly. Main Street's a monthly one. Realty Income Corp's a monthly one. Right? Doesn't look like a lot because I only put $125 into this. Wait until there's $100,000 into this. Let's follow the journey and let's just see what happens. Well, hey, that's all the time I got for now. I got to get my kid to school. I got to get to work on my business. I got a lot going on, and I really appreciate you following along. Was the video boring? I don't know. I'm trying to educate you as best I can. Invest your money if you can. $50 a month, $25 a month, $100. Do something, right? We all get paid. Pay yourself first. Power companies going to get their money. Credit cards get their money. Everybody else gets their money. How about you pay yourself first, right? Until next time, thank you for watching. Have a happy Monday. If you don't hear from me by Halloween, have a great Halloween. Thank you so much. Stay blessed. Thanks for watching. Please like, subscribe, leave a comment below. Are you investing? What are you investing in? If you have any questions, leave a comment. I'll be sure to take a look at it. I'll answer your question as best I can. If I don't know the answer, I'll find it. Have a good day. Thank you so much. Take care.